VINCENZO'S Go Crypto Investing, where you like, subscribe, and share for a one-of-a-kind, company-made, computer software trading probability-based trading alert, technical analysis, and company philosophy, as I'm your most trusted source for blockchain technology and cryptocurrency breaking news and coin updates here on YouTube and in the cryptocurrency sphere, as I brought truth and most importantly integrity back into the trading sphere, right? And this is another breaking news update along with the Bitcoin current price, but this is another warning shot. We went over 3 arrows facing possible insolvency, Celsius getting close to insolvency, and now we got another big crypto exchange, Hong Kong based. Babel Finance temporarily suspended the withdrawal and redemption of cryptocurrency assets on Friday as the crypto lender scrambles. And this is becoming an all too familiar sight and sound in this brutal bear market right now of exchanges and lenders trying to pay its clients, scramble to pay its clients after a recent slump in its digital currency market. Cryptocurrency values have plummeted in recent weeks as investors dumped risky assets in a rising rate environment, with Bitcoin, Bitstamp, BTC, which reached a record high of 69,000 in November, has lost more than half of its value. It's actually more than 60% now, I believe. Recently, the crypto market has seen major fluctuations. By the fluctuations, they mean crash, right? And this is another example of an exchange and a lender, not just exchanges, but lenders, people that manage money under assets under management in cryptos, and they're having problems paying out their counterparty, right? When the coins go down, they're with all the risky stuff like lenders that are paying interest when you loan them your money and then you stake on their site and then they pay you 10, 12, 20% year over year return in interest. How are they getting that? The banks aren't paying that. How are they doing it? They're doing risky things, and it's more than likely when the markets go into a bear market, they get exposed and they get liquidated, liquidity crises in their exchanges or their lending platforms. And then they go insolvent, meaning they go bankrupt, right? And you lose all your money because it was a highly speculative, risky thing that they're doing. And there's no way a company or a lender can give out 10, 15, 20% yearly interest on your money when they're not making a profit. It's impossible. When they do that, run as far away as you can from these kind of lenders and companies like that. Now, as the bear market gets tight, right? And it's only going to get worse. These lending companies and exchanges that were offering such outrageous, fraudulent, not seen since the BitConnect used to do that, and the Ponzi schemes of Bernie Madoff, run far away from that and don't put your money, if you value your money, on these exchanges. Old Vincenzo once again is here to protect you, yes, you, the consumer of cryptocurrencies, when you're trying to make safe money, as like somebody, say Carl from the moon, tells you to lend your money to these lenders and exchanges for 5, 6, 8, 10% interest. Well, how are they coming up with that money when they lose money? They're not a profitable company. They are money burning companies. How are they doing that, huh? How are they doing that, old Vincenzo? Write this down. These lending companies are taking the early investors, like when they come out, say they came out in April of 2021, when the market boomed, and they start lending money out at 10% a year, varying by how much money you put on there. Well, the first 6 months, as the cryptocurrency is going into its hype cycle, new investors want that 10%, so they put their money in, right, at the end of the month. And then the guy that invested first gets paid back his interest from the second guy that deposits money on there, right? And then the third guy pays the second guy, the 10th guy pays the ninth guy. And usually the first guy is so happy after his 6% or 10% in 1 month interest payment, instead of taking the interest and his principal out, he keeps his principal in and throws the interest back in, hence makes the scheme bigger, lets more money get sucked into the scam and the Ponzi scheme, and more investors that are in at the end that aren't smart enough to recognize what's going on, they get stuck like what's going on here and on Celsius and all these Celsius and all these other exchanges that are having these problems. Cryptocurrency valuations have plummeted, obviously. Crypto lender gather crypto deposits from retail customers and reinvest them, proclaiming double-digit returns and attract tens of billions of dollars, got suckered in. The retail trader was fleece heisted and shisted to the most extreme degree imaginable here by them offering outrageous returns that is only possible by new investors putting in and hype cycles to pay off earlier investors. And eventually the new investors dry up. You can't pay the old investors, and poof, the scheme is exposed for a Ponzi scheme for what it was. Peter Schiff debated the Celsius guy about 8 months ago and essentially called him out on it, saying this guy, Peter Schiff, essentially called out the guy on Celsius when they were having a Bitcoin debate, and he was asking, how are you able to pay 10% a year return when your company loses money and you don't sell a product, right? And Peter essentially said it's a scam, and it eventually would come unglued. And 6 months later, in a bear market, Peter Schiff was proven right that the Celsius was doing highly speculative things to try to pay back their 10% interest that they're giving everyone for staking and whatever they were doing over there. And they've been exposed. This is a good article you could read. Peter Schiff does not like any crypto, right? I'm not as extreme as he is, but I get exactly what he's saying on a lot of this. That's how I had a foresight to see how these pumps and dumps happen, right? Talking about Sailor's Bitcoin, you can read that if you want to see that. But that's a very important breaking news. And here's an updated Bitcoin price. If we go over to the dollar, you can see the dollar is rising. If we zoom into the dollar, you can see it's pumped over that 105 area. And now if the dollar is going to remain bullish, right, you got to hold that on the top side like this, like so. You get back on top of it, you start trading, hold this as new support, and then continue up in the next leg up. And that is very possible. If you're looking for crypto or the stock market and the equities to have a little bit of a pump, you want this to get rejected and trade back down closer to the 101 level, right? And then maybe you could have some room for at least the stock market to move up. Crypto is going to be a little bit tougher because all these things that are going on with it. And you can see the stock market was up early. Now the stock market's getting slaughtered because the dollar is going the other way. Every time they try to pump a little liquidity into there, it gets sucked right back out because the state of the overall market. And we do a quick rundown. You can see Bitcoin's trading back down towards that. If we zoom in, you can see that white support box that we put on and said, if you want to get bullish, you got to get over that yesterday. You got rejected twice now by it. Once, and then it came all the way down and it came back up this morning and got harshly rejected. And now it's trying to trade back down towards that 19,676.44, which was the all-time high back in 18. And if it hits that, would be the first time ever a bull cycle came all the way up to its top, its local bubble top, and then on its bear market came back down and not only broke, not just to break it, but touch it. It's never come all the way back down and touched it before. And when we're very close, and this is going to touch, and that'll be the first time ever. And a lot of crypto people in the crypto community that don't know anything but the coins go up, they were saying, well, the bottom's going to be in somewhere in the mid-20s because it's never come back down and touched its old previous blow-off top. And if that's the technical analysis and your fortitude that you're using to say crypto can't go below that price, that is horrible, bad logic, and flawed, because just because it hasn't done it in the 3 previous times doesn't mean it ain't going to do it this time. Right now you're seeing that it's going to do it, and as soon as it does it and it breaks that critical area and you get a little bit below that, you're going to see a big major liquidity crunch flush, and that price is going to essentially crash. It'll crash in a blink of an eye. It'll go from the previous all-time high and it'll sell off 40 to 50 to 60% in a blink of an eye as it sucks every last bit of margin out of there. And you could see a price on an overreaction bottom out somewhere between $3,300 and $6,600. You know, as you know, old Vincenzo has had this late 2022 target. Now we're in mid 2022 of 13,336. And you say, well, where'd you make that prediction, old Vincenzo? Here. Anybody could have made that. Nope. Old Vincenzo made that prediction after around, we called the bear market here, right? We said we're entering in a multi-year bear market back there. Nobody else was willing to go out there and say that. Then we were shown to be in a bear market, and then we had a big bear market rally, right, as the Fed did its final push. But this was still all a bear market, right? The bull market ended right there. This was a bear market rally here, as it never really sustained itself. Even though it made an all-time high, it never sustained itself up and had a weekly or even a daily close over the all-time high. It always quickly reversed. So this, in the hindsight now, old Vincenzo nailed the call back here when I said this was the start of a multi-year bear market. Crypto winner, first on the scene in the crypto sphere. I just didn't have a lot of followers. And now, as you see where the price is now, obviously this was the bear market. This was obviously the start of the bear market. This was not the start of the bear market. This was the end of the bear market rally, right? Bear market rallies are often more extreme than bull market rallies because it tricks everybody to think the bull market's going to continue. This was misdiagnosed by almost every single person out there in the crypto sphere. I was thinking this was the end of the bull market right here. Actually, the end of the bull market ended here when old Vincenzo called it. Then you had a massive bear market rally, and this was the signal of the end of the bear market rally and continue of the multi-year bear market, right? And that's what's happened here. And now I have a feeling we're going to have a massive liquidity crunch, and you're going to see these prices come all the way back down to the mean in a classic pump and dump. Everyone's misdiagnosing what's going on. And I think you're going to come all the way back. You could come all the way back down to the major volume area from the whole history of the coin at 1,500. But I believe you're at least coming down to the bottom part of this white support zone. Somewhere in this white support box, you're going to have to come down to. And then you could be looking at something even more dangerous. I know my chart's cluttered, but you can see you could be having a left shoulder, a big head if it comes back down to the neckline, this white support box, and then you get a big right shoulder, right, a massive. That's where I think you could have a 2 to 3x return in Bitcoin and maybe a 50x return in altcoins, where everybody thinks this is going back into the bull market, but this is really just a macro multi-5-year head and shoulders topping reversal pattern that when it breaks the neckline, you come to a catastrophic flush, and somebody like Peter Schiff could be right, where Bitcoin comes all the way down on that head and shoulders and comes way back down into the supply zone between a couple $100. That's the most extreme scenario, but that's something to definitely watch out for. And that's what I'm going to be sitting here and watching out for you. Like, subscribe, and share. Peace and love. Peace and love.